Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 31st, 2024. I'm Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. It is also Fed Day today. Here's a look at the ES in the daily time frame. Very quiet price action ahead of today's FOMC statement and rate decision. A doji-like day right now, 15 points of total range. That is very compressed here, just 36% of ADR heading into the RTH Open. This market could continue to be mostly compressed throughout much of the day until the Fed statement and rate decision are announced at 1 o'clock p.m. Central, 2 p.m. Eastern. Now, the open price at that 1 o'clock statement release will be our key level for the Fed. And once that key level is released, we could see quite a bit of action off that level, not only into the end of the day, but also Thursday and into Friday. Friday, we also have the NFP report as well. So we could get quite a bit of volatility here as we head into the next week of trading. And the FOMC key level will give us a basis to trade off of. Right now, we do have compression here, which will likely persist into the early part of the afternoon. But if you look at the monthly pivots here as we head into February tomorrow, we have a higher value relationship and a checkmark trending move to begin the year. Another checkmark trend move could take us quite a bit higher. So even if we pull back toward the previous month's midpoint early in February, that could provide a bouncing off point for this thing to continue to march toward new highs and into the 5,000 level. Again, if there's any failure on the pullback, that's when we could be looking at additional weakness up ahead. There is some pricing down here to retrade back through, so we could see one move back down and another move back up as this thing either builds out and continues higher. But right now, we don't really see a whole lot of selling pressure just yet, but that could pick up if a failure at the previous year's close develops. So something to keep an eye on as we move forward. But right now, the expectation is for compression here for the most part ahead of the 1 o'clock p.m. Central rate decision. 30 minutes to follow after that, we get the FOMC press conference, and that could provide quite a bit more volatility later on this afternoon. Looking at the NQ, very similar price action, perhaps a little bit of weakness here late yesterday on earnings. Earnings yesterday really put a dent into things for the NQ. Tech earnings came in for Microsoft, AMD, and Alphabet, and that led to quite a bit of selling pressure late in the day. We did get our fade after trend move here in the NQ back to the midpoint, and again, earnings really let things kind of melt down a bit more here late in the day. We're still overall trending up. Still have a higher value relationship heading into next month. Really nice checkmark move to begin the year here, and any pullback could still be a buying opportunity for a continuation up as this thing continues to trend higher. Again, if we do fail at the midpoint from the previous month, that's where it starts to open up the lower part of last month's range. So that could take us as deep as the 16.3s. So we will see how this develops here. But overall, compression again heading into the RTH Open, just 56% of ADR and 135 points of range, and that could continue to kind of play out as we head into the 1 o'clock announcement. Now looking at crude oil, this one's down a little bit here today, about 1%. A little bit of a deep pullback. That's kind of what you would expect after yesterday's failed new low. Yesterday we were watching 76 for signs of rejection. That could take us back to this dot right there, which is the 77.85 midpoint from the previous session, and it played out in spades. A great rejection on the lows, an aggressive push to the upside, and it eventually reached that midpoint. That's a great bounce off of the rising 8-period average as well as it continues to climb above the slower moving averages to provide support. As we look into next month, we also have a higher value relationship here as well with the pivot range. Any pullback into that zone could still be a buying opportunity for a continuation up. Expecting another checkmark move higher for crude oil in the month of February as this thing looks to kind of top out in early March. And expecting for at least a test at 80. If we can get through 80, 84 could be the next target up above. So 84 is going to be the big edge to watch early in February, or throughout February after an early pullback in February could provide the buying opportunity. For today, You'd like to see bulls be able to defend prices at the previous session's midpoint, currently below that level right now of 77s. If price can push back above that zone, that could provide a bit of a check mark move here today as well. Looking at gold futures, gold up marginally right now, about 0.4%. This one found resistance right around the 2070 level yesterday we called out. It was the high of about 2068. But again, this market remains mostly sideways, I guess, within the boundaries of this larger key range, that impulse move right there that really set the edges. We haven't tested those edges since they've been set, and instead this has been an inside month for January. So the high and low of January are inside the high and low of December. Heading into next month, that provides us with a very narrow pivot range and price closing near the center point of that range. That's the current monthly high, that's the current monthly low. It's a very narrow range of price action. We could continue to see this thing build up a bit. Again, today we will get an FOMC key level that could begin to give us a little bit better directional conviction out of gold, but it still remains clear that 2070 is an area of resistance for this market. If we are to push through it, it's going to need a very big stop run day through that level to open up some upside. Until then, we could still see this as the top end of resistance, and the lower end of support will be near 2000 as the box continues to develop. Lastly, looking at the YM, you'll notice the YM right here, very narrow here heading into the RTH Open, just 134 points of range. This one has been quite a bit more bullish against its counterparts, the ES and the NQ. It has been melting up in a big fashion here after pushing through the top of this narrow range, continuing to push higher, newly traded pricing right in the zone, and again a higher value relationship heading into next month's trading. Any pullback into this zone could provide a buying opportunity for this thing to continue to push higher. We will see how the market responds here to the Fed later on today, but again, not anticipating this thing running off to the upside further ahead of the Fed. Instead, we could be looking at range-bound action for the most part at these highs in anticipation of the statement and rate decision later on today. But again, higher value relationship heading into February. Any pullback could provide a buying opportunity for a continuation up until proven otherwise. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.